European stock markets are broadly high this morning, with the UK's FTSE 100 index currently trading just above the flat line, up about 5 points, while the Euro Stoxx 50 index is up around about 2 points, also flat. And in the currency space, the euro is losing a bit of ground against the dollar. No surprise there. And in peripheral bond markets, both Spanish and Italian bond yields are very calm at the moment. Good morning, I'm Ishaq, Siddiqi, and welcome to another Daily Market Bite. I'm going to give you a quick roundup of what's going on in markets today. There's a little bit to talk about, and most of the focus is on Europe. So we've had a Eurozone unemployment data, another record high. Again, no surprises there. And at the same time, inflation has fallen in the Eurozone. That only serves to build a further case for the ECB to cut rates on Thursday. Investors are looking for a 25 basis point rate cut. And if we don't see that, given the fact that it's been so priced into the market, we could possibly see an aggressive sell-off on Thursday if the ECB fail to act as markets would like them to act. Now, of course, we've known over the weekend that Italy has a new government that helped to risk sentiment over the weekend and into yesterday's session. Today we are pausing for breath after the developments in Italy, as we're looking for more details as to where the Italians want to take this broader coalition. On the whole, net, it's positive out of all the possible scenarios that Italy was facing between a caretaker government or new elections, which both would bring about a renewed uncertainty for a prolonged period. So Italian bond yields have been running off highs of the year and reaching levels we haven't seen for a while, at least since the Eurozone crisis really started to bite last year before the ECB put out their OMT, their bond buying program. Now, in terms of other news out of the Eurozone, we had German unemployment data, which is pretty much in line with expectations, so no surprises there. Again, the big surprise, though, if there is a surprise, is the fact that Germany, being the powerhouse in Europe, isn't creating as many jobs as people expected the country to do. And that is a little bit worrying. That is a little bit worrying for investors because this is a country that is the power of the engine of the Eurozone. And in order for the Eurozone to make a full recovery, we're going to need Germany to start growing in their labour market. So a lot of focus is going to be on that in the coming months. And when it comes to corporate earnings, that's been very much in focus today, particularly banks, which have done surprisingly well. Good numbers from the likes of Lloyds Banking Group. We also had a strong showing from Deutsche Bank and also UBS. So good on the investment banking side. On the whole, pretty positive for investors with a European earnings season in full swing. Hasn't been that great of a season, but it is getting better, and it is very positive that those cyclical stocks such as banks are starting to show positive growth and positive outlooks, given the fact that the broader economic outlook is improving somewhat compared to last year. So what have we got going on today? We have Chicago PMIs later on in the session and US pending home sales, and those two will be very much in focus. Also, I have to remind you that we do have a Fed meeting, policy meeting on Wednesday, and investors are going to start scaling back a little bit before that, retreating perhaps, and we may see a bit of range-bound trading until we get more from the Fed. Thanks for watching your Daily Market Bite. I'll give you an update on what's going on tomorrow. Cheers.